Welcome to TradeTheMBI.com. This is John. This report is for the 31st of August, and it's interesting. We've now had this massive reversal from gloom and doom to a bunch of articles starting to say that, well, despite everything being so horrible, we're modestly bullish. Well, isn't that convenient for him after all this crying and moaning about how the world was ending and it was an apocalyptic situation for the markets? Still not terrific. I mean, shakeout's still in negative territory. We do see a nice upturn in long-term buyers. Short-term buyers a little soft, but mid-term buyers, but short-term buyers have really pushed things, kept things alive for the most part, and that's really what's propelled this near-term action. So we get a turnaround mid-term buyers in, we really should propel to new highs. It would appear that the hurricane, while having done significant damage, could bring unanimity on both budget impasse and all sorts of other things as far as new aid. It's only going to spur growth. We've also started to see a significant uptick in demand for oil. That may not necessarily impact price. We'll talk about it when we get to looking at oil, but that's a significant factor we've been talking about to indicate increases in growth rather than stall out. And I think that's what we're seeing, which means rate increases fairly likely then, particularly as the latest numbers with the revised GDP up 3% for second quarter. We're likely to see at least that much going here into the third. So yeah, that's going to have a significant impact, and it goes back to what I've been talking about, that the multiple of the market is probably not factored in high enough to accommodate for future inflation that's coming up, and that's where some of this price increase has to come from, and that people miss that. Well, that's their mistake. The euro pulling back on all that news because it does indicate that, in fact, this move was a bit excessive. We still have to return back to this positive extreme, which was the original breakout move, so all the way back to that low 118 range would be normal. However, you're still looking at pretty strong support here. Central banks, I mean, we're talking also about currency wars developing again, and I think clearly we can see that there was some serious involvement in pushing the euro higher, because it really does help U.S. companies in that, and so that's had a significant impact. That we're even this high on treasuries is just mind-boggling. Here's the oil situation. So now you're going to have a huge inventory buildup because obviously you've got some supply disruption as well as refinery capacity reduction from the whole Texas situation. And that has an impact. They're also having a drilling impact there as well. That's actually going to dry up some supply. The point being, though, is that they'll be able to ramp up pretty quickly once they get started again. And you're going to need significant worldwide growth to be able to counteract the fact that the U.S. can produce significant amounts of energy now. And while that depresses price, but the real key for us, though, to look at is growth expansion is there, and we're seeing it in the increases in the amount of oil needed. And gold, you know, people talk about the collapse of gold, that it's over, blah, 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 you know. Just let them yak and follow what the indicators are telling you. And as long as that cyan is below red, it's still bullish. So even though you're retracing some positive extremes, you've had just some pretty phenomenal move, and sometimes it's going to even out a little bit, and that's all that is. So from the day standpoint, we had a nice little short signal come up here. It started as we were moving. We had the plus 13, but the cyan was still below red. Now, sometimes when you get above zero, you're heading there. For me, seeing also the decline at the green below red, it's an indication, but you know, if you're long, there's no reason to jump out of stuff when you've got a positive extreme, so you know that at a minimum, that's going to get retraced. So sometimes what I'll do is I'll take that early signal when I know I've got a positive extreme set up like that, and I can take it early enough to where I've got room, and so by the time the official signal came in on the break of the ABM, already there, and you're able to get a little bit more. The only expectation I had with this, with the rising low was to the 50% point, and at that point you can then evaluate and see whether it's going to be deeper. We did go slightly negative on the shakeout, but immediately turned around, produced the long signal again, and it was back off to the highs. So you had a similar configuration right back here at the peak levels. Sometimes though these can sit around for quite a while, but what you look for is that heavy decline in both the red and green. Gives you an indication. But this one had short-term buyers reset from the beginning of it, and that's always problematic for a significant decline. You typically get small retracements, usually at 23%, which in this case would be the 76% retrace. If I click on the line, you'll see it. It goes 176, 61 to 50. Well, the 76 is still equivalently to 23% roughly. Overall, though, I think what we're seeing is right what we expected. As long as we continue to make new highs, even the rising low is not significant. And right now, you have pre-market up quite a bit, slightly overbought into the second one. That's not a whole lot to have to retrace. So shorts continue to getting squeezed. And now that you have a psychology change, we may see a final burst here. To end up the month, it looks like we're going to get close from a daily standpoint to right where we started the month. Let's go to the open action from the beginning of the month was right here. If we look at the open, it was 68. We're at 55 right now. There's a chance. It's not necessary, but the point being is, for all the talk for an entire month of summer gloom, all we got was added volatility and pretty much stagnant price, which fit fairly well into what our expectation was. We still have a slightly bullish viewpoint, and that hasn't really changed. We saw some weakness develop into the charts. We took that into account. That's all you can do. And you wait for a little bit more defined action. I think the debt ceiling and whether those talks, there's a very narrow window for it, so it's got to happen pretty quick. And that could lead to some really nice swings, particularly if there's stalls or people are trying to posture for this or that deal. So we'll let that go. Indicators, I'll probably send them out a little bit the middle of market action today so that you'll be all set for Friday's action. As always, trade well. Talk to you later.